Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are getting ready to kick off another year with geopolitics front and center. Now, keep in mind that President Trump today saying, quote, there has to be a disarming of Hamas as he met with Israeli Prime Minister Benjamin Netanyahu on this Monday. The two did meet to talk about the ceasefire in Gaza, whose troubled opening months ago are stoking concern that regional fighting could resume in the new year. We did see U.S. Secretary of State Marco Rubio and the Israeli Prime Minister talking about regional security, economic cooperation, and the fight against anti-Semitism during that meeting today. That came from the State Department. But it sounded like there was a handful of issues, Vani. I know you were covering the event when President Trump made a few comments on this, but also a lot of other things. The reporters asked about a lot of things, but it sounds like it's not quite done yet.
No. And yeah, as you say, President Trump literally said there were 5 major subjects that we were discussing and that Gaza was one of those subjects and it was a tough place. But you know he wants to get to phase 2 of that deal. But it doesn't seem like Netanyahu is comfortable moving off of phase 1 yet. But of course, Venezuela came up, Russia, Ukraine, a lot, Iran. So with that said, let's talk a little bit more about that.
Yeah, well, we'll talk about, that is certainly on our radar, but let's get to also the war between Russia and Ukraine. This is the other geopolitical issue, if you will, that's certainly on our minds. It's getting very close to beginning its 5th year. President Trump held a call with Russian President Vladimir Putin earlier today. That was according to the White House. And that came one day after the U.S. leader met with his Ukrainian counterpart, President Volodymyr Zelenskiy. They talked about efforts to bring halt to the Kremlin's war. President Zelensky said he asked President Trump for U.S. security guarantees lasting as long as half a century to help deter any future Russian invasion.
We discussed all the aspects of the peace framework, which includes, and we have great achievements, 20-point peace plan, 90% agreed, and U.S.-Ukraine security guarantees, 100% agreed. U.S.-Europe-Ukraine security guarantees, almost agreed. Military dimension, 100% agreed. Prosperity plan being finalized.
And that, of course, is Ukrainian President Volodymyr Zelenskiy. That was yesterday after a meeting with President Trump. Hey, let's get into this and what's going on with you, the United States involvement between the Russia and Ukraine war. Dr. Angela Stent is back with us. She's senior fellow at the American Enterprise Institute, author of Putin's World, Russia Against the West and with the Rest, a former national intelligence officer for Russia and Eurasia, as we said, at the National Intelligence Council. She understands the situation so much. Great to have you back with us. Angela, I am shocked that we're getting very close to going into the 5th year of this war. What are you seeing, if anything, that tells you we are getting maybe closer to an end or not?
Well, we've had very furious negotiations going on now for the past few months with Russia, between certainly Stephen Witkoff, Jared Kushner meeting with Putin, and then with President Zelensky meeting with President Trump, meeting with European leaders. We have 2, I think, competing peace plans out there. The 28-point peace plan, which was leaked a few weeks ago, and which sounded as if it had been largely written in Moscow, but it was a joint U.S.-Russian peace plan. This would have been unacceptable to the Ukrainians and really to the Europeans. And then we now have apparently a 20-point peace plan, which was agreed between Ukraine, its European backers, and I think the United States, which cuts back on some of the compromises that Putin was demanding that Zelensky make. Zelensky yesterday, of course, did say that 90% had been agreed, but I think it's the last 10% that's very problematic. Putin called President Trump before he met President Zelensky. They've had another conversation, and I think the Russians are going to string this along, but we still have no real indication that Vladimir Putin is interested in stopping this war.
You know, Angela, I feel like we've talked about this so much, and, you know, it does sound like President Putin, he wants land. I mean, he got it the first time that he invaded Ukraine, and he wants it again this time around. Is there any chance he backs off of this? Because this is what seems to be really a major sticking point.
Well, he wants the land, but the land is a means to what he really wants, which is the subjugation of Ukraine. So when he talks about we have to get to the root causes, yes, he would like the whole of the Donbas region and is asking Ukraine to give Russia land that Russia doesn't control. But that's just a means to an end. It would make Ukraine more vulnerable if the war breaks out again. And he wants Ukraine to say that it's going to remain neutral, that it's not going to join any Western alliance systems. That's what he really wants. And he's using the land question in a way to distract from what the broader goals are.
How much is there a time constraint here, Dr. Stent? Because, there are elections. I mean, there's elections coming up in Ukraine, and obviously at some point we'll get the midterms here. And then at some point after that, there may or may not be a change of leadership. Is Putin focused on things like that?
Well, Putin is demanding elections in Ukraine, but of course there can't be elections in Ukraine unless the fighting has stopped. And you have to have a ceasefire first, and Putin has not agreed to a ceasefire. Yes, we have midterms coming up here, and a majority of Americans now, more and more Americans support Ukraine and are much more wary about what Putin is doing, and that includes Republicans not only in the Senate, but Republicans in the rest of the country. So I don't think Putin feels any time constraints, but the Ukrainians do, because they are running out of manpower. They do have manpower problems. They need more weapons, and the U.S. is selling weapons to the Europeans, who are then giving it to Ukraine. But there's not an infinite supply of those weapons. So, and we have winter coming up now. It's already upon us. That could be more difficult for the Ukrainians. The Russians are bombing all of their energy infrastructure and depriving them of heat and light and things that they need for the winter. So I would say the Ukrainians are under more time constraints than the Russians are, but they're not losing this war as the Russians claim they are, and they have taken back some territory recently that the Russians claim that they hold. But certainly Putin believes that time is on his side.
The security proposal under discussion, it's apparently for a 15-year term. Zelensky wants that to be a lot longer, perhaps as long as 50 years. Will he get it?
Well, we're not really clear what those security provisions are. I mean, Europeans are willing to provide troops to enforce any kind of peace. The U.S. has said that there'll be some kind of backstop. They've talked about Article 5 type guarantees, which is what NATO countries have, which means if one NATO country is attacked, the rest of them would consider that an attack on all of them. But it's very hard to see how you get those kind of guarantees if Ukraine isn't a member of NATO. And again, we could have a different government in the United States. You can have different governments clearly in Europe. There are different elections coming up. So I think a 50-year guarantee is probably unrealistic. But one understands why Zelensky wants it, because, as long as Putin's in power or people like him, they're not going to give up on subjugating Ukraine. So there could be another reinvasion in the coming years.
Angela, is it clear what the U.S. position is, especially after President Trump was asked in the earlier press conference when Benjamin Netanyahu and he were together? President Trump said he was very angry when he heard from Russian President Vladimir Putin about an alleged attack on one of his residences. Again, allegations, we're not quite sure. I believe Ukraine has maybe denied this. But I'm just curious, is it clear where the U.S. stands? Or is that part of the negotiating tactic of being kind of friend and foe, and it changes maybe from week to week or day to day?
Well, what's clear is that Trump wants to improve ties to Russia. He's wanted to do that since day one of this second term, that he's offering the Russians economic incentives, which he thinks may bring them round. He does want to bring the war to an end. I think he genuinely wants to end the war, and then he also wants to claim credit for it. But, yesterday he said some things. He equated the Russian bombing of Ukrainian civilian structures, energy infrastructures, with the Ukrainians sometimes hitting Russian energy installations. And then he also said yesterday that Putin wanted Ukraine to succeed, which is a rather extraordinary thing to say since they've been making war on Ukraine, for nearly 5 years now. So yeah. I'm not sure what the U.S. position is, but I do think the Trump administration wants the war to end.
All right, 10 or 15 seconds. I'm not going to ask you to bet the house on this, but do you think we wrap up this war? Does it get wrapped up in 2026? Just quickly.
I wish it could wrap up. I'm not sure that it will.
All right.
Dr. Angela Stent, thank you so much. Dr. Angela Stent is Senior Fellow at the American Enterprise Institute and author of Putin's World, Russia Against the West and With the Rest.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, we want to stay with all of the geopolitics that continue to come at us. Henrietta Treyz is with us. She's Veda Partners Managing Partner. She's also Director of Economic Policy. She also served in the U.S. Senate as a tax, banking, and finance legislative assistant. So she understands the private and the public sector. She's done a lot. Henrietta, good to have you back with us. I do want to go domestic, but first I've got to go global. The president's spending a lot of time on foreign affairs. Is this important in terms of the U.S. economic situation, the U.S. business environment going forward?
You know, I think what's clear from that press conference and what we saw from Zelenskyy's meeting today, and then to tie it into China, as the president did earlier, even on the China front, with all three of these instances, with the U.S. trade deal with China, the negotiations between Ukraine and Russia, and the Gaza and Hamas and Israel situation, is that there's got to be devils everywhere. Devil is in the details, and we don't have any details. There are no hard and fast details. The president wasn't able to give any of them, neither on the Abraham Accords or, as you just mentioned, on the West Bank, on timing. There's daylight between Netanyahu and Trump, and I think there's a lot of daylight between Zelensky and Putin, to say the very least, and there's a lot of daylight between the U.S. and China on just our terms of trade deal. So I think it's pretty clear that all of this is going to drag into 2026, and the president is extremely occupied with these issues. The issue for the president, and then therefore for the Republican Party down ballot, is that Americans are not focused, and they don't even have in their top 10 issues that they care about foreign policy going into next year's midterm elections. So to tie in the foreign policy part is really interesting for the president to double down like this on these issues, which are obviously important to him, but are not making forward progress and don't impact the U.S. consumer or voter.
I love that you went there, and certainly for the global investing, audience, this can matter, right, in terms of opportunities or relationships. But having said that, when it comes to the midterms, which will also be important to financial markets, and what more of the president's agenda he can get done in the second half of this second term for him. So this focus is surprising. Do you think he shifts in the new year?
I think he tries to do both. He's tried to do both in the first year, where he did the One Big Beautiful Bill, which was very economically oriented, $3.5 trillion in deficit increasing tax cuts, principally to corporations in 25, with some of it coming for individuals in 26. I think the Republican conference and the president feels like they've done their job on the economy, and now we need to wait and let it work out. That's certainly what they're hoping for going into next year. The trade, or rather the tariff dividend that the president touts, is $450 billion of money he's not going to get out of Congress to send home to the American public. So there's not another fiscal package coming from D.C. He has to keep an attention on other things while touting the One Big Beautiful Bill, because there's not going to be another piece of legislation that passes in 2026, in my opinion.
Hey,
that's going to keep the issue alive.
Well, and the other thing, I'm just kind of blown away by some of the notes that you guys shared with our team. The most controversial view Veda has going into 2026 is that when SCOTUS rules on those tariffs, if they rule against them, the president will not quickly move to replace them with new authorities, as he and his economic advisors insist. But he would say that SCOTUS would be handing the president a domestic gift by striking down the tariffs, which equate to about $1,800 per household at their current levels. Do you expect SCOTUS to strike them down?
Yes, I do. And I think I'm in pretty good company on that one. As you know, the courts below, the Court of International Trade and the Court of Appeals, have both rejected it. My odds are 65% that the Supreme Court's rejected it. I'm hopeful that they do it in the first quarter and get this, binary event, $3 trillion binary event off our backs. But the single best thing that could happen to this administration, and again to Republicans down ballot, is for the president to get the tariffs revoked by the Supreme Court. He doesn't have to, admit failure or anything along those lines. He can just say the Supreme Court won't let me do it, and then just not migrate to 338 or balance of payments authority or 232s or 301s. They're going to be threatened. But look at the ones that have already been threatened and aren't yet on. Pharmaceuticals, semiconductors. Where's the critical minerals investigation? It was supposed to be released on the 27th. It might be on the president's desk, but he's clearly sitting on it. And that's because he can't afford to have prices continue to rise by imposing new tariffs, especially on those items. So I think it's the best case scenario for this president, for the Supreme Court to take the tariffs down. That would clear the de minimis tariffs. That would clear all the IEEPA retaliatory tariffs and give the president the ability to take a more nuanced approach to trade instead of the blunt axe that was Liberation Day. And I go one step further, if I may, and say if he takes the opportunity to reimpose all these tariffs, it's going to be so confusing for small and large businesses alike. It will be the equivalent of Liberation Day 2.0. You can't just swap them out.
Right.
So, prepare for April 4th again.
Well, that means it's going to be an interesting 2026, no doubt about it, whichever way it goes. Henrietta, always enjoy getting some time with you. Henrietta Trays, Veda Partners Managing Partner and Director of Economic Policy, joining us here.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, from the fintech sector to the commodities space, we're seeing a major pullback. Well, I would say, a modest pullback, really, in gold and silver. But the two metals did top records earlier this week. I mean, they just went on a tear. Here to break down the recent moves, Mike McGlone, Senior Commodity Strategist with Bloomberg Intelligence. So, Mike, how much of all of this was just pure speculation?
Just about all of it, I think, Vonnie. When you get to these extreme levels, particularly in thin markets with things like gold and particularly silver. Silver is known as the devil's metal for a reason, but they're up so much this year. Silver, as you've mentioned, we've noted a lot. It's the best year since 1979 for both of those metals. And history has proven when you rally this velocity, my rule as a strategist is I take off that fundamental technical outlook. I switch over to a money manager. I say, typically, new longs at these levels do very poorly. So I'll give you an example. Silver settled 1979 at $32.20 an ounce. And the first end of the year to close above that level is this year, 2025. It's been a long time, almost 50 years.
What's driving the trade and the sell-off? Is it a supply-demand metric? Is it investors looking to move assets around? A safe haven place, certainly, when it comes to gold? What is it? Because I know supply-demand can often be a big factor, Mike, when it comes to various commodities and precious metals.
Well, certainly, Carol, in silver it is, but the narratives that they're using now for pulling up silver have been around for years. We've all known about the demand from solar and everything, but to me now it's in that speculative excesses stage. And I think people are realizing it's much more beneficial maybe to allocate to some precious metals where there's only 4 versus cryptocurrencies where there's 28 million, as a previous announcer failed to mention. There's an unlimited supply of cryptocurrencies, and there's only really about 10 major metals. So I still think they're going to do well. The problem is they've just gone too far. So I like to compare to metals now. Was when the Hunt brothers cornered the silver market in 1979. We had a similar peak this year in cryptocurrencies with Mr. Trump tilting over from antagonist to zealot. And it's to look forward to next year. I think it's a good chance things like silver can get down to 50 and up to 100. But basically, it's the top metal that can go down because it went up too much. And even gold. Gold can easily trade down below 4,000 and above 5,000. But I think it's a top metal that can also drop a little bit just because they've gone up so much and there's so much in the mainstream now.
Mike, a quick word on copper, because we had it rallying above $13,000 a ton in London overnight. Now it came way off that price, but there are real concerns surrounding copper and its industrial uses, right?
Yes, so copper, the main theme is the supply constraints this year. It's very rare. And is there going to be that industrial demand from places like China, which is in basically a recessionary, a deflation period? So I look at copper as completely dependent on the stock market going up again next year. And if U.S. stock market drops, copper will probably drop about twice as much. But copper is also autocorrelated. So I'm very worried that it's not going to be able to sustain these rallies, particularly as you look at deflationary forces in China, as indicated by its 10-year yield, about 1.86%.
I feel like, Mike, we'd be remiss not to give you 30 seconds on crypto, considering the conversation we just had and how
he
often.
Just took off. Did you hear it?
I don't know. What are you thinking about when it comes to Bitcoin in particular for 2026? And just got about 20, 30 seconds here.
More likely to go to 50 and maybe lower than stay higher. It's another thing that's completely dependent on stock market going up, and it's probably indicating we're going to see more volatility next year.
All right, good to know, and I'm sure we'll be checking in with you a lot. Mike McGlone, thank you so much. Happy holidays. He is Senior Commodity Strategist with Bloomberg Intelligence, joining us here.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, everybody, we are back on Bloomberg Markets. We're across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. I'm Carol Masser with Bonnie Quinn. All right, well, IPOs return kind of in a big way, maybe big with quotes, I should say. U.S. IPO volume, excluding SPACs and closed-end funds, exceeding $40 billion. Those deals created 21 new billionaires. However, many of them saw their wealth diminish afterward, and that plays into the share price, what happened after those new offerings. Dylan Sloan covers IPOs for us here at Bloomberg, and he joins us right now in studio. Dylan, let's talk about the good news, because we did see finally the IPO market open up. We're not at the record levels that we've seen in years past, but nonetheless, we saw some activity.
We did, yeah. It started strong. Venture Global, one of the first firms to debut this year. It was slated to be the biggest energy IPO for over a decade. They downsized that slightly, but again, things got off to a hot start. Expectations were really high. This was viewed as an administration that would be favorable to a lot of these big deals. We also closed the year with Medline just a few weeks ago, which was
massive.
The biggest IPO worldwide this year. One of the largest medical health IPOs in years. So, start and finish were strong. But again, there was a little bit of instability there towards the middle that I'm sure we'll get into. All
right. So we talk about it minted 21 new billionaires. Yeah. Are there still 21 new billionaires, or did that not exactly last?
Exactly. So we did see somewhat of a recurring pattern for a lot of these offerings. There was a lot of retail interest for many of these. We saw a bunch of offerings in a lot of these buzzy sectors, sort of AI plays, crypto. And we would see these massive spikes in the first day or two of trading. We'd see the economic value of insiders stakes spike to billions or multiple billions of dollars, and then often those gains would fall just as quickly.
Yeah, I mean, I always felt bad for the retail investor, because unless they had got in beforehand, and how would you know, and you can't, then they were completely, they would have lost a lot of money on these.
Exactly, and some of these ups and downs were really big. Newsmax is one in particular that we were looking at. That was back in late March, early April. Those shares gained, 2,200% in the first 2 days of trading. Massive spike. Chris Ruddy, the founder, former New York Post journalist who said there's no money in journalism, right? He was a billionaire multiple times over after that offering, but then again, that was all gone just as quickly. Shares are now trading below the IPO trading price. And like you're saying, it really was an up and down, and a lot of people got burned on this.
It leaves a really bad taste in the mouth, doesn't it? So what's the outlook for the beginning of the year? Because certainly into the end of the year, we did a deal today. We're having deals almost every single day at the end of this year.
Yeah, a lot of the reporting that's been out there about the outlook for 2026 is around some of these really big name deals for companies that have been private for a while. We're thinking SpaceX. Right. That's one that Bloomberg's been reporting on extensively. We're talking potentially about a $1.5 trillion IPO coming sometime next year. OpenAI, Anthropic, Stripe are some of these other really big names that have been thrown around. So that'll be a bit of a disconnect from this year, where it was a lot of these, again, smaller companies, many of them sort of holdovers, crypto companies that had kind of waited it out during the crypto winter and were coming back to the public markets now after a few years. So that's something to definitely look out for next year. Of course, all still up in the air a little bit, yet to be seen if any of those going through, but certainly could be big ones.
The Winklevi became billionaires this year. I mean, are there any among because you guys break it down by IPO and some of those that became new billionaires, anybody who held on to their money throughout?
Yeah, relatively few companies. And I will note that, even though some of these companies did have that massive spike and then down, many of them are still trading at or above the offering price. So, for people who got in at the very beginning, they're doing okay. But I would say in terms of themes, to break it down, crypto is one that I've said a few times. That's when we saw Bullish, a crypto exchange, down about half from its opening price. Webull, another exchange, down nearly 90%. We also saw Circle and Gemini, two other crypto firms who've lost a lot from their high watermarks. The energy sector was another one where we had a few big names. Venture Global, which I mentioned at the beginning, liquid natural gas company, they're down a good bit from their IPO back early in the year. And then Fermi, also this AI data center company, recently down about 77% from their high water mark in October. So those themes.
You got to go to CoreWeave, though. We talked a lot about CoreWeave this year. Talk how that happened.
It's been an up and down for CoreWeave, a real roller coaster. You know, right after the offering, things were a little tepid. It wasn't entirely clear where it was going, but then we saw a really big run up later through the year as, again, they've become kind of increasingly more involved in that AI play and really kind of a poster child for a lot of these new neo cloud companies that are popping up.
But it's amazing. You look at the numbers. So they're up, changed since the opening IPO price on March 28th, up almost 100%, so almost doubling. But since the high water mark, they're down almost 60%.
Exactly. Yeah, it has been a really big up and down, and not instant for them. It's really kind of been over the course of the whole year. But that's one that's still playing out for sure.
And then what about the stablecoin companies and that whole area? Because we had Circle, and that sort of everybody's eyes popped when that went public.
Right. Exactly. That was one of those that saw a massive gain right at the outset. And it's down about 70% from the high water mark on June 23rd. But overall, it's not actually doing that poorly. That's one of those companies where, compared to the offering price, they're faring relatively well. Obviously, there was the Genius Act passed over the summer, which helped kind of solidify some of that, the regulatory landscape around stablecoins, which has been a tailwind for them. So it's one of those companies where, it kind of depends which angle you're looking at it from.
It's certainly something the administration has been very, very
absolutely
interested in.
And there could be some more legislation tied to the Genius Act next year as well. Dylan, thank you so much. It's a fascinating beat, and we love chatting to you. That is Dylan Sloan covering IPOs for us right now.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.